Hey, good afternoon. This is Tyler with Art Jetter and Company. Hey, I am glad that you guys have joined us. Thank you so much and welcome. I'm going to give it a couple more minutes for attendees to get in to the system, and we will start this presentation. All right, guys. If you're just now joining us, I want to thank you and welcome. This is Tyler with Art Jetter and Company. We're going to be going over with Principal's regional wholesaler, Alex Wesdorf, as we dive into Principal's business owner solutions and disability insurance. We are going to let the other registries and attendees trickle in at this time, but I'm going to go ahead and turn it over to Alex and let him present.
All right, thanks a lot, Tyler. Can everybody hear me? Good deal. Well, thanks again today for having me, Tyler. For those who do not know me, which is pretty much everybody, I'm sure. I've been with Principal for a little over 6 years in the industry at that time for disability solutions. And this is a conversation that just we don't see happening very often when it comes to protecting a person's biggest asset, their ability to make money, right? And then going a step further, what we're really going to dive into is in terms of business owner solutions, right? It doesn't matter the size of the business. You could just be a sole proprietor, or you can have partnerships or really big companies, right? Everyone has a need from a protection plan. So we're going to go into a couple of those solutions as we kind of dive in here. The first and foremost, what you're going to look at is we're going to look at number one. The first thing that people need to think through is individual disability insurance, right? If you're under the age of 55, that's probably the best target, or you might be a little bit older. You really need to think about what happens if you stop working. Where's the money going to come from, right? Do you have a salary continuation plan at your work? As a business owner, the business owner just thinks that the company's going to keep paying them, but does a business want to keep paying someone that is not working, right? That's going to add, if you're not adding revenue, and you're taking away from the company at that point. And so everyone first and foremost needs to have individual protection, right? They need to make sure that they have money coming in so they can put food on the table for their families, right? Or just themselves, right? If they're single. So younger is always better, right? If you start buying these policies on yourself when you're younger, it's like a term life policy. Buy at 25, it's gonna be a lot cheaper than you think about it when you're 55 and say, hey, I wanna be able to protect my income for the last 10 years of my working career. Let's start that earlier. Let's start that conversation earlier. But really diving into the business needs, right? Again, the individual protection always needs to go first. What you think of when you could have a small business. You can have one person, 5 people, 10 people, 100 people, 1,000 people. And we're going to kind of get into maybe group benefits or retention of key people. But think about it, when a business owner goes down, what does that do to that business, right? If they're a small business, the business owner is definitely going to be a revenue driver for that business. And so if they go down, right, that's going to hurt revenue, right? And so when somebody is disabled, right, they're not making money. A business owner obviously is not making money. They're not helping their company make money. We got to think of a way to help them maintain their livelihood, right? Paying their bills that they had today, but also paying bills for the future, right? Because if you're too sick or too hurt to work, we have to think about where's that money going to come from to pay for their everyday expenses. And then when you think of a business owner, again, you're going to lose revenue and profits. And so you have new expenses that are going to be incurred by that business owner going down, and then somebody's got to step in, right? So if you lose a key person, for example, if you lose a key person to that business, not just from a recruitment standpoint, but if you lose that key person, you're going to be in trouble, right? And so we're going to dive into, again, some of the products that we offer at Principal. So overhead expense is a product that we reimburse a business owner for their covered expenses when they are out on claims. So usually the benefit period ranges from 12 months to 24 months. And the goal of this is, okay, business owner, think of a dentist, right? If you go down, what does that mean, right? I want to give you 12 to 24 months of reimbursement of expenses to figure out, are you coming back to work or are you not, right? So that way you can sell it if you're going to not be able to come back to work and not sell it for pennies on the dollar because your revenue is dipped, you lost all your customers, right? Part of that overhead expense policy allows you to go hire a temporary solution, right? Another dentist in this example to come fill that gap. And so that's a huge thing. We saw this during COVID. It's a little bit different, obviously, but when a dentist was not able to have patients, right, it crushed their revenue streams. And you see this if you're in the marketplace in maybe a group benefits, you're going to see this. And the dental costs are skyrocketing. They're trying to recover from 2020 and 2021, and depending on some states, 2022 even. And so overhead expenses for that smaller business owner or owners, right? So you might have 3 dentists, you might have a practice that has 3 dentists, right? They all have a third of expenses that they need to pay for. Well, buying 3 policies again to make sure that the other 2 don't have to pick up that person that's out on claim is a huge, huge benefit. Again, you're going to be able to maintain your business so you don't have to sell it if you can't come back to work for pennies on the dollar. Alongside of that, again, going with the dental example is business loan protection. This can be sold individually. You don't have to have it necessarily a part of overhead expense. But as a business owner, if you're going to go out and buy a business or buy, have an existing loan that you need to keep adding to, right? This is going to protect that ability to repay that new or existing loan. So if you have a 10-year note for $1 million, and you go on and claim in year 2 of that note and you have this policy, we're going to pay that off for the next 8 years. It's a great tool for you guys to use with your business owner clients that, again, are going to go and buy a business or a practice. Maybe they're taking over a business that has an agreement with another business owner to buy it over the next 3 years, 5 years, 10 years, whatever that might be. We can insure that loan, right? We can reimburse that owner to help them out with that, with the loan obligations. Key people, that is the hot conversation today. How do you keep your key people? But what if you lose them, right? So if you lose, you want to help retain them, right? So benefit packages, different things like that. But what if they go out and claim for disability? What does that do? And so we do offer a key person disability policy. So if you've written life insurance, you probably have heard of Key Man Life Insurance. That generally is just term life. You might, do some IULs, whatever it may be. Key person disability is its own product. And so what we can offer is if you're a business owner and you have either a minority owner or a non-owner that is vital to the revenue stream of your company, and they were to become just sick, it's going to crush your revenue stream. We can help you out with that, right? So basically the way that it works is, let's say your person makes $150,000. They're your top salesperson, they're a C-suite, they're a management level type person that you can't afford to lose due to a sickness or injury or anything else really. We need to really think about, hey, what's going to happen if they do go? How do you go to recruit the next person to fill their gap quickly, right? And so the person that makes $150,000, we can actually give them 3 times income. So $450,000 to that business if they become totally disabled, not working, in a tax-free benefit. So $450,000, and you can do that in a lump sum after 180 days, right? You can get that money after 6 months, get that $450,000. And the nice thing about it, and we'll get into the disability buyout next, but the nice thing about Key Person is there is no obligation to use that money in any way. You get to decide, right? So if you want to use $450,000 in this example to go buy a boat, to invest, to recruit, to use it as marketing dollars, you literally can do whatever you want. Some people I've heard use it as some sort of, maybe give a portion of that to that Key Person because maybe they were a family member or they really cared about that person and they know that person's not gonna be able to work. They give some of that tax-free money to that person. So there's a laundry list of things that you can do with a Key Person policy. But again, think of it as, hey, if that person goes down, what happens to my revenue stream, right? And how much more money is it going to cost to replace that individual, right? Again, the competition to keep your key people is only growing, and so the cost to replace people is very costly. And so this is a great way as a business owner to have tax-free money coming to the business to go find the replacement and use that money however you see fit. So one of the things that Principal does, and I think is really advantageous, and you should take advantage of it. No sales have to come from it, obviously, but we do free informal business valuations and buy-sell reviews. And the reason I think that is such an asset to your practice is because most businesses have no idea what they're worth, and they have no idea their buy-sell is very outdated. If you have a business who's been in business 10 years, they might have a handshake deal, they might have a napkin deal, right? Or maybe they have a legitimate deal, but it's 10 years old, right? And so things that people need to be thinking through as business owners, if you're in a partnership of some sort, the 4 Ds. What happens if you die? What happens if you become disabled? What happens if divorce happens, departure? And so we can really focus in on the disability portion. And so you can use that, and I can send a link to Tyler to pass out to everybody on this call. But we do free informal business valuations and buy-sell reviews. So our CPAs and our attorneys, they're W-2 employees of Principal, and they will review the documents, the tax returns, and the buy-sell the buy-sell, and we will actually get on the phone with you and your client and talk through that. And you can bring on their CPA, their attorneys, to kind of go through what does it actually say in the event of a disability or a death, and then kind of go through that. They don't give advice, but they give guidance since it is an informal business valuation. So kind of going back off of that, we do have a disability buyout product. And so again, in most buy sells, there is a triggering event when it comes to a disability. The problem is 99% of the time, I don't see it ever funded on the disability side. On the life side, I see it funded. It might not be adequate for what they actually need because maybe growth, but you usually see some term life or some other life insurance solutions in that buy sell. But whenever I look at the disability and I ask the business owners, what happens if you get cancer and you don't die from it, but you're out of work for the next year? What's your buyout plan? They don't have one, right? So instead of the business owners coming out with cash, what we can do is we can transfer that liability to Principal, so that way they can do the buyout that way. So kind of moving along, the group benefit space, right? Again, key people is a huge deal for retaining top talent in today's marketplace. Those are the buzzwords, so people aren't just looking at salary, they're looking at what do you give me? What do you give me in terms of benefit packages? And so, when you think of group long-term disability, it is a great benefit. I have it at Principal, but again, most people don't realize what they get. If your employer pays for it, it's a taxable event once you receive it. And if you're a highly compensated individual, there are caps on a group LTD plan. And so if you are someone that makes above that cap, you literally have money that's not insured at all. If you're under that cap, you're gonna get 60% of your monthly income on a taxable basis. So if you make $120,000 as a gross W-2 employee, right, that means you make $10,000 on a gross basis. And that group LTD plan is gonna pay you $6,000. And just like your $10,000 is taxable, that $6,000 is also taxable. And so supplemental need is obvious, right? There's a need for it, right? No one looks at their group life plan and says, hey, I have 50 grand, I don't need any more. they always say, okay, I have a family. I need 500,000, a million, whatever that number is today. I have 4 kids, and so raising 4 young kids, 7 down to 2, it costs a ton of money to raise kids these days. $50,000 gets me through Costco in a year, right? And so what we want to do on the disability side is really cover that gap. So in this example, you can see kind of a scatter graph of, okay, if the group LTD plan is 60% replacement with a cap of 6,000, that means anybody making under $120,000, they're going to get that 60%. They're not capped out. They haven't hit that cap. The problem is those people that make above that 120, they don't realize they're not getting 60%. And so what I'm showing you here is, hey, how can we get you closer to that take-home pay, right? So you can see the example here. You can see their gross income. You can see their after-tax money. You can see the group LTD in the middle. So you're going from 100% to 70% after tax to 60% to after taxes, you're at 42%. So you have about a $2,800 net loss if you go out and claim. And so what we're trying to do is say, hey, let's get you back at least relatively close to what you were taking home. You'll never fully insure someone in terms of what they were making prior to a disability, but you'll get pretty darn close, right? Depending on the type of money you're making. And so this is a good breakdown. Again, that's 60% to 6,000. This is a breakdown. So the more money you make, the less percentage that group LTD replaces. Again, because you have money over that cap. So you can look at the 120, he's getting 60%. At the 150, 48, 36, 29. And as you make more money, this is all money, right? So if you're a business owner and you're set up as an S Corp and you're taking a distribution, we take W-2 income and K-1. Maybe you make commissions, maybe you have bonuses, right? We take it all into consideration. Some group plans don't cover some of those wages, right? And so what we're trying to say is, hey, you have some people that are making above and beyond. How do you retain them? How do you retain your top talent? So again, this is just an example. Just think of like the C-suite of a company. They're making good money. They get this 60% with a cap of let's say $10,000 a month, right? You have all these examples here, and you can see that hey, we're covering 34 to 40% in these examples, and these are the people that make serious decisions, right? They're the ones that the CEOs, the management level, the CFOs, and they just have no idea that their group benefit's not going to pay them a whole lot if they become disabled. And so what we try to do is try to get them back to either you have 2 plans. You have a restoration plan, getting everybody back to 60%, being on even playing field with your rank and file, or you do a true executive carve out, whereas maybe your target is 75%. You want to do something better than what you give to maybe the rank and file employees, right? And so you can go to a 75% target. It's going above that 60% replacement. And there's 2 ways to do this. You can do it underwritten. Maybe the business owner doesn't want to do it. Maybe they don't want to pay for everybody. That's fine. People can come and they can get discounts and they can supplement their income. Or maybe the business owner wants to keep those people around through a benefit package. So we offer guaranteed standard issue on the disability side. Again, all this is you need 5 or more people that exceed that cap on that group long-term disability. The business owner recognizes it. The business owner is going to be involved in this plan more than likely because they're going to make above that cap as well. And instead of having to go through medical underwriting, we can say, hey, you have 5 lives, we'll make you an offer. Maybe it's another $5,000 on top of your $10,000 or $5,000 on top of your $6,000 of your group coverage. And we're going to get you back to 60%. Or we can go to that 75%, right? We can go a higher target. And the nice thing about this is there's 0 medical underwriting to do this. It's employer paid. It's 100% mandatory participation, but you're doing 0 medical underwriting, and the enrollment is simply a census enrollment, and you're done. And so it's a great way to, again, show your top people, hey, I care about you. I see what you're doing. You're a huge revenue source for us. I'm going to do something above and beyond what I'm doing for everybody else to make sure that you stay here. You can also do the key person disability that I brought to you guys earlier in this segment on a guaranteed standard issue basis. Again, you're going to look at least 5 lives. And again, owners, if you're going to have owners in there, they have to have less than 50% because they can't be a majority owner. But again, this is a great way to get some lump sum benefit without having to do any kind of underwriting, right? So if you want, $500,000, you can have a 1-year wait, and then bam, the business gets $500,000 if that employee goes down, right? Again, they get to dictate how they want to use that money as a business owner, but there's, again, no medical underwriting to go through that process. Again, just kind of talking about the enrollment and how easy it is. That census enrollment is so easy for you. You don't want to learn a new trick. Applying for things and going through medical underwriting is always horrible. So if we have a census and we can see the group LTD plan and we can see the incomes on that census, we can identify those opportunities for you and kind of look at how can we implement some of this guaranteed standard issue for your key people. So I went kind of fast, kind of went through a lot of things, a lot of business owner solutions. Does anybody have any questions for me? I also know it's Thursday before a very nice weekend for most people in the United States, so totally get it.
Well, thank you. Yeah, thank you again, Alex. Question box has been open. I've answered a couple. Alex, this is a question for you. Can the agents get these slides for the presentation?
Yeah, yep, I can send that to you.
All right, perfect. And then we just got a new question that popped up. Is there any type of return of premium?
We do not have the return of premium on any of our disability policies. Nope.
Okay, answer those two. Well, thank you, Alex. Thank you for everything you've done. The presentation is great and very helpful. A lot of knowledge to go with Alex and Principal's team. If you have any questions, feel free to reach out to either me or Alex. You can email me or call me anytime, and I can point you in the right direction and get you set up with those products that are offered by Principal. So thank you guys for attending, and I hope you have a good rest of your day. Thank you, Alex.
Thanks again.